Good morning.
Good morning, sir.
Good morning, everyone. Okay, so it's 8:15 in my time. All right. So how's everyone? How's ACQ? So it feels like it's been a while since our last meeting. A lot of things happened then. We got three more golds. Three more medals. Hopefully, one more this afternoon. Okay. I do remember though that we had covered already the first three national internal revenue taxes: income tax, estate tax, and donors tax. And so today we're going to review concepts affecting this fourth national internal revenue tax. Okay, this is well to me. Well, based on my experience only. This is one topic that most of law students would find a little more challenging, a little more difficult to understand than the others. This is, of course, the value-added tax. So our main reference should be Title 4 on, of the National Internal Revenue Code. But still a good advice if I ask you to also consider scanning the pages of the next title on percentage taxes. Well, even though this may not be included, but as you can see, even from our discussion of past topics like income tax, we had to resort to some portions of Title 5. Now, particularly, we talked about one section here, that is Section 127, when we discussed the so-called capital gains tax of what used to be 5 and 10%, but is now 15%. Okay, that is the capital gains tax arising from a stock transaction. Although in Section 24C, 25A3, and other counterpart provisions of the CGT provision, the tax base there really is income. Okay, though I said it is the income tax arising from the stock transaction. It's really, of course, the income that is subject to the tax. Whereas in Section 127, it is the particular transaction itself that is subjected to the so-called percentage tax, right? So in the RR, we even refer to it as stock transaction tax. But Section 24C, along with the other counterpart provisions, is still an income tax, though more popularly it is known as the capital gains tax. So just to tell you that there would still be relevance in going through the pages of your Title 5 on percentage taxes, especially when we discuss this time the value-added tax, because there is a more intimate relation between the two kinds of taxes here: the VAT, certain transactions, and then you have the percentage tax also in certain sales and activities, right? They are both business taxes. Well, by and large, they are. More relevant to us, of course, is the first section of Title 5 on percentage taxes. Section 116 has been mentioned before, particularly in our discussion of the so-called 8% tax, the alternative to the personal income tax at graduated rates in Section 24, Paragraph A. Do you remember that? Section 116. It has been mentioned there because per Section 24A, the alternative tax of the flat rate of 8% is paid in lieu of the personal income tax at graduated rates and the percentage tax under Section 116. Now, why 116 would be relevant in the discussion about the 8% flat tax? It is because the persons who are entitled to this alternative 8% tax are our self-employed individuals whose gross sales or gross receipts in a year do not exceed 3 million pesos, right? So these persons who are entitled to VAT exemption on the basis of gross sales or receipts not exceeding 3 million pesos, which is the threshold provided in the last subparagraph of section 109, titled VAT exemptions, are not at all exempted from the payment of a percentage tax. There would still be liability, and that is now provided under section 116, a percentage tax of only 3%. Instead of the higher rate, 12%, this person who is engaged in business or in the conduct of trade or exercise of profession would be paying also on the same basis, gross sales or gross receipts, but the rate is lower at 3% only. Okay, so this individual who is again engaged in trade or business or exercise of profession would traditionally be liable for income tax on his or her taxable income at the graduated rates provided in 24A. At the same time, liable for this percentage tax of only 3%, again, because a person is VAT exempt. Okay, that is the traditional setup. But under the new scheme, as introduced by the train law, the self-employed individual can pay only one tax, but should already be in satisfaction of those two taxes, income tax at the graduated rates and the percentage tax of 3%. Okay, so that again for your review is that instance when we had cited Title 5 in our discussion of other matters, particularly the income tax. All right. Okay, so this is again the value-added tax. The first thing that we should mention about the value-added tax is, okay, let me just bring you to the relevant okay, Title 4 on value-added tax. All right, this is something that you will see in the first section. In describing the tax, this matter about the VAT being classified as indirect tax. Now, you won't see a counterpart provision describing a tax as whether direct or indirect in relation to the other national internal revenue taxes. Now, perhaps this would settle once and for all what the value-added tax is, but even without this second paragraph, I think that it would not really be difficult to convince that the VAT is an indirect tax. Anyway, universally, it is recognized as an indirect tax. Okay, so by indirect tax, of course, we know that it is a tax wherein the burden of such tax may be passed on to another, right? So as opposed to the other national internal revenue taxes that we had discussed so far, which are all direct taxes, this VAT is by statutory provision an indirect tax. And that is again found in section 105. Okay, so those two taxes that we had discussed so far, income tax and then the transfer taxes, they are direct taxes. Okay, so statutorily, the person made liable is also upon whom the burden of tax is imposed. Okay, so the burden may not be shifted all, right? So in your tax syllabus, of course, you have this topic about the kinds of taxes. According to this classification, whether the burden may be passed or shifted to another, you have direct taxes, which may not be shifted, meaning that the burden may not be shifted. And by way of examples, of course, you have those three taxes that we had reviewed already: income tax, estate tax, and owner's tax, right? So for today, our topic is about the value-added tax. Okay, this is clearly an indirect tax. Okay, so the next national internal revenue taxes are also indirect taxes. As I've said, the percentage tax is also one thing that you have to just consider reading for purposes of the bar examinations. Excise tax, by the way, is also another national internal revenue tax, wherein the burden may be passed on or shifted to the purchaser, right? So kinds of taxes. According to the tax base, of course, you have this classification of taxes into power capitation as one, and then you have property tax, and finally you have excise tax, right? Now, when you talk about property taxes, of course, it's obvious that the basis of the tax is property itself. Okay, so as an example, we have real property taxes as a tax falling under that classification. Okay, there are quite more falling under this classification of excise taxes. Okay, this is sometimes known as a privilege because the tax is imposed upon the exercise of a right or privilege. Okay, so such as the privilege of earning income. Okay, so the income tax is in that sense or in that classification excise tax. The estate tax is a tax on the privilege of gratuitously transferring a property to another. It's just like the owner's tax, it's also excise tax, right? So we use the word excise for purposes of the classification of taxes according to the tax base. So here we have the subject of taxation being certain transactions. It's also a privilege given to persons. And excise tax is the class of tax that the VAT may fall under also, right? So we have this particular tax basis now. Specifics, sale of goods or properties, and then in section 107 is importation, and finally in 108, sale of services and use or lease of properties. So these are the specific activities that are subjected to the value-added tax. Okay. All right. Now, in our discussion about the value-added tax, of course, we cannot escape from a discussion of the so-called destination principle. We can see it here in our syllabus. Okay. The last item here in number 1, right? The so-called destination principle is that rule that would make taxable only the sale or consumption of goods that are destined for consumption in the Philippines, and vice versa when goods or properties are destined for consumption abroad. The VAT will not be applied. Okay, so the application therefore of the VAT will depend upon the destination for which goods or services are to be consumed. Okay, so this is the principle that we adopt so far as the Philippine VAT is concerned. So in our discussion of the VAT, we will be applying the value-added tax only on the sale or consumption of goods here in the Philippines or services rendered here in the Philippines. Okay, so the shifting feature of the VAT will not apply, therefore, when it comes to the goods or services that are destined for consumption abroad, right? So again, this is what is known as destination principle. Now, if I have to bring you back to the basic general principles, okay, this one concept that is very much a favorite in the bar exams here, the concept of double taxation. We've talked about the instances of double taxation in our past discussion, such as in income taxation, particularly in the case of international juridical double taxation, which may happen in the case of resident citizens and domestic corporations. Now, that is because our resident citizens and domestic corporations are taxable in respect of their incomes coming from sources within and without the Philippines. So double taxation may take place whenever in the country of source of the income tax is also in place. So there will be two taxes that our resident citizen or domestic corporation may be held liable for. Okay, so the foreign tax and the Philippine tax. Likewise, in the next title on estate and donors tax, we also considered the scenario of double taxation in the case of persons or transferors who are residents or citizens of the Philippines. In estate taxation, if you may remember, we include in the gross estate properties wherever situated. In the case of citizens again and residents, meaning to say in the case of resident citizens, non-resident citizens, and resident aliens, right? But in the case of non-resident aliens, the properties that may be included in the gross estate in our computation for the Philippine estate tax is only property that is situated in the Philippines. So in the first group, therefore, double taxation may take place. That is because in the place where the property is found outside of the Philippines, there may also be in place there a transfer tax. So when a Filipino or a resident, even though not a Filipino, a resident of the Philippines dies, leaving behind property situated outside, if we may imagine an estate tax as also found in the law of the foreign country, then the estate taxes that will apply would necessarily be the foreign estate tax as well as the Philippine estate tax. So double taxation, okay, could take place also in this instance. The same holds true in the case of gift taxation, right? But of course, there are, of course, because of double taxation, there would consequently be additional burden that will be felt by the persons upon whom two taxes are imposed by different taxing jurisdictions. It is quite burdensome because of not only one tax being applied on the same object, but there are, of course, reliefs that may be availed of in the case of double taxation. Okay, there may be such tax devices as tax exemption or tax deduction or tax credit, all of which are intended to minimize, if not eliminate, the effects of double taxation. Okay, so these are the known devices again. Okay, tax exemption may be applied by exempting the same tax base from tax in one jurisdiction, therefore only maintaining tax liability in the other jurisdiction, right? Now, there may be no tax exemption applied in one, but certainly the double taxation effect may just the same be minimized or eliminated. In fact, if in one jurisdiction where tax is imposed, deduction is applied, or if not, tax credit is applied of a certain amount, okay? The amount that would usually correspond to the tax that is paid in another jurisdiction. Okay, so for purposes of income tax, of course, we had considered Section 34, Paragraph C, which is the source of tax credit for taxes paid in foreign countries, right? So this is again in the case of income tax only. Whenever there is international juridical double taxation, there may be tax deduction here or tax credit against tax for those paid in foreign countries. See this? But again, this is only relevant for citizens and domestic corporations because they are the only two persons anyway that are subjected to taxes in respect to incomes coming from sources abroad, right? And in transfer taxation, as in estate tax, we also have this tax credit as the device utilized in minimizing the effect of double taxation. Again, international juridical double taxation, wherein the estate tax is claimed here as tax credit. Okay, so it's only tax credit, unlike the one we had considered here in income taxation. It may be deduction, or it may be tax credit at the option of the income tax payer, either an RC or DC. And then, of course, we have in gift taxation, tax credit provision again for taxes paid to a foreign country. Right? So these are the tax devices again that may be availed of in order to minimize the effects of double taxation. Okay, and what is the source? None other than the National Internal Revenue Code. Right? So it's our own tax code, okay, that is the source of the tax devices as tax deduction or tax credits in order to minimize the effects of double taxation. But outside of the tax code, of course, there may be tax treaties that could be the source of the reliefs from double taxation. Outside of our local law, okay, there could also be tax treaties like the RP-US, RP-Japan, and such many other tax treaties wherein the double taxation as an international phenomenon is usually captured in a provision there with the intention of eliminating the burden caused by double taxation. Okay, but as far as we are concerned, for bar exam purposes, tax code lang naman tayo. So it's enough for us to know that such tax deduction or tax credit is made available in the case of resident citizens and domestic corporations in terms of income taxation. And only tax credit in the case of estate tax and donor's tax in terms of the transfer taxes here. Right, so far that is okay, the matter about double taxation. And this would be a phenomenon that would hardly be possible in the case of value-added tax. As we had already explained earlier, we follow the destination principle. So as far as Philippine VAT is concerned, we only apply the VAT on sales or consumption of goods or properties or services here in the Philippines, while we do not in the case of transactions outside of the Philippines. Okay, so there is not a provision here that would make VATable a transaction outside of the Philippines. All right, so you see similar transactions like sale of goods or properties, and then you have sale of services. Okay, when situated outside of the Philippines, they will not be taxed here in the Philippines. Okay, so again, hardly would it be likely that one person may be taxed twice. Okay, so that is a known feature of our VAT, right? So just take a look at this. Okay, just take note of this topic, and we shall explain in a while also. Okay, one more relevance of this so-called destination principle. But at this point, we have seen the three known transactions already. Okay, you see here 106, 107, and 108. Okay, 107 is the activity of importation. Okay, importation of goods. Right? Two of these transactions, Section 108 on the sale of services and use or lease of properties. And they have 106 sale of properties are qualified by principles of trade or business. And by the way, of course, when we talk about the value-added tax, the person statutorily liable for it is the seller. Though we said earlier that balance and direct tax, so the burden may pass on to another person. It remains the seller who is liable for the tax. Right? So that is again in case of the value-added tax. One more tidbit before I proceed to phase most of trade and business. Still people might think that in income tax, it is the direct tax. I don't understand what, but this is the theory. In the case of these taxes like capital tax, I think this might be the source of the confusion of some students. In that, the CGT of course may be passed on to the buyer. Liability of that tax may be passed on to the buyer. When they may not have that parties in sale or property, may agree on the liability of that tax being borne by the buyer, but it would not make the tax in the direct. Statutorily, the person liable for the tax is still the seller as income earner. The CCG is the tax on and therefore the person receiving income is sale between two parties to the transaction seller. So again, even though the buyer might agree on shouldering the CGV of percent, it will not make the tax in the direct. So in that sense, the income tax liability is not really passed on to the buyer as would make the tax in the direct. Unlike what we have here, before now, the value-added tax, the burden of the tax is shifted to the buyer. But statutorily, still the person liable for the VAT is the seller. The money that we pay or remitted to ARR actually comes from the pocket of the buyer. Simply shifting the burden of the tax to the buyer. Therefore, the money that we remitted eventually comes from the pocket of the buyer. Okay. So again, what I first paragraph, there should be no confusion about this concept of the person selling goods or services. Therefore, this is one most important. It is person liable, even though the tax is indirect. Okay, so it's the person who for the previous business sells goods or renders services. The person who, again, there we will find the qualifier in the phrase income course of previous business sells goods or commodities or renders services. So parehas itong dalawang business na ito. Qualified by the phrase course of trade or business. So when we read 106 here, 106 of the rules, it should be sale in your course of trade or business. So that this transaction be valuable. Parehas din sa section 188 sale of services and goods of properties. So the sale of goods, sale of services, taxable activity. The person therefore is taxable activity, meaning the seller should be person liable for. right? So therefore, we talk about sale of goods, sale of services, and these are the transactions that we are focused on for purposes of examining only the problem in the part that's concerned are sale transactions. Sales transactions. Dito na tayo. Ang unang requisite that you should look for is this matter about the main source of a labor business. You should be convinced first that the state is more source of labor business before you can finally concluding that the value added is available. Again, for our approach, discussion of income tax and natural taxes, know whether tax base is present. We talk about the application of income tax. One has to be certain first that there is income that we realize this year. Otherwise, to the basic question is the person liable for income tax. You will always end up at that conclusion. No, whenever you are thinking there is no income. Realize this year. Maintaining the ability of a person liable for income tax only when there is a certain income tax and income having been realized or received. So listening to the question whether there is tax or no tax applicable, what has to be considered for there is the transmission of calculation. Kung wala transfer of property, then there could be income tax due also arising from a transaction. In the next case, if there is transfer of property, it is not going to of course, and also saying that either there is tax or no tax is applicable. So let's say also here that we talk about the sale of goods or sale of services that are everything. Should be a lot of also if there is no sale activity going on, then there cannot be a value added tax. It's the first thing. And the second thing is if there is sale or service, including these properties. If they are not, or if the transaction is not made for of labor business, then the VAT not only be applicable. Okay, so as a friendly reminder, do not be excited that saying that VAT is applicable just because once you see about sale of goods or sale of service. All you know, the crux of the question really is finding out whether you can fully appreciate the object of compensation. It may just a question about whether the state is made more of a labor business. Right? So if therefore the state is not more of a labor business, it should be automatic. The value added tax is not applicable. Our role of that is then apply to only sales of goods or services and also of the labor business. Right? The next transaction here or importation, section 117, is now modified by the basic rules of the labor business. It's so long as there is importation, and that's why I said that you can for exempt from vacations. Then it is without regard whether it is made by the ordinary course or say labor business. Without regard whether the property is imported is using business or not. The value added taxes on importation without being subject to the base of labor business. So in the case of sales transactions, therefore, whether the subject is a goods property, one answer services on the other. Is the state of element of the trade force of labor. So one to say that they say is more labor business. There must also be right? Some commercial or economic activity being conducted. Some commercial or economic activity. So you remember the case of De La Salle University? it was a lease of property that the BIR had determined to be the activity being conducted here. And why the BIR was convinced that De La Salle University was liable for the VAT insofar as its leasing transactions are concerned, well, because the lease transaction is that commercial or economic activity that it had determined to be the transaction that may be subject to the value-added tax. In the case of De La Salle University, the foundation of the assessment against the school for value-added tax is this part, the lease of properties, okay, section 108, right? Again, the BIR was convinced that De La Salle University was engaged in 108 activity, particularly, again, this latter portion, the lease of properties. Okay, why was the BIR convinced that it is a VATable activity? Because the transaction was made in the course of trade or business. The lease of property itself is the commercial or economic activity being conducted by the BIR. Okay. Now, the source of its rental income was the leasing activity. Okay, this was the focus of the BIR's assessment. If you remember, in the case of De La Salle, of course, there were two assessments made there, one for income tax and the other one is for the value-added tax. As to the income tax assessment, it is a tax on the rentals earned, right? De La Salle University being non-stock and non-profit educational institution. The BIR's assessment against the school was on the basis of the receipt of rentals, not really viewed as coming from property, but activities conducted for profit. You remember section 30 again? Here in section 30, tax on, or rather exemptions from tax on corporations. The exemption here is not absolute under the last paragraph. There is liability for tax in respect to incomes coming from either of these two sources. Number one, property. Number two, activity conducted for profit. Okay, the BIR would rather view the rentals received by the De La Salle University as one coming from activities conducted for profit. Okay, so that it would be able to justify not just the assessment for income tax, but also the value-added tax. Because a taxable transaction for VAT purposes is the lease of properties. Okay, hindi uubra naman, sasabihin mo, let's impose VAT on property. Right? But again, the VAT being a tax on certain transactions, one of which is the lease of properties under section 108. If you're on the side of the BIR, you'd rather view the rentals as gross receipts coming from lease of properties, at the same time made in the course of trade or business. The leasing activity being the commercial or economic activity being conducted by the person. Okay, so this is one very important consideration in determining whether there may be a taxable transaction being conducted by a person. In a case that I am sure you had already read, there are two of these cases involving power sector assets and liabilities management court. One is in 2019. Okay na itong 2017. Okay, the case is again entitled Power Sector Assets and Liabilities Management Corporation. It's apt that we review this case because this involves NAPOCOR, and there will be a lot of cases involving NAPOCOR or NTC. Okay, cases for VAT purposes. There are just quite a lot of VAT cases involving NAPOCOR. But here, in the case of Power Sector Assets and Liabilities Management Court, we learned that this This corporation, SAM, was created by virtue of the IPIRA Act, right? It was created by virtue of the IPIRA Act in 2001, and it was created for the purpose of managing the orderly disposition of the assets of Napocor in its generation business. Okay, so Napocor would not anymore engage in the business of generating electricity because this business will be put to a stop while its generation assets will be transferred to SAM for SAM to sell the same, to the end that the financial obligations of SAM will be fully settled. The other business of Napocor, or MPC, that of transmission, will instead be transferred to another government entity, that is Transco, National Transmission Corporation. Okay, so ito ang ating kaso ng Power Sector Assets and Liabilities Management Corp. Ang ginagawa ng SAM is, of course, to sell the generation assets. This particular 2017 case involves the sale of the power plants. Okay, where, okay, saang power plant ito? Ayan. Magkano ang involved? Okay, malaki ang involved ng sale. Okay, it was the sale of these power plants that is the subject. Ay, I'm sorry. Sorry. Kaya pala. Ito. It was the sale of the power plants that the BIR had viewed to be the taxable activity that SAM was engaged in. You see, okay, this refers to the hydroelectric power plant in Pantabangan, and the other one, okay, is the Magat plant. Okay, dito pa lang, $129 million in bid. Okay, the other one, 530. So, malaking amount involved dito. So, can you just imagine if the BIR will be successful in its issuance rather of the assessment against the power sector for VAT? Malaki ang amount, okay, na basis, okay, billion. Okay. So, that's how it is. Okay, so we will just cut the story short here. Okay, going back to the main paragraph about the phrase in the course of trade or business. Here, in the end, okay, you will find that the VAT assessment was not sustained because of the lacking element that there be some commercial or economic activity being conducted by the person who is charged of the VAT liability. Okay, so this is the part still here. Some could not be considered as being engaged in some commercial or economic activity, precisely the sale of the power plants and other generation assets is really the performance of its governmental mandate, that of liquidating the assets of Napocor so that the latter's financial obligations will be fully settled. SAM is a government-owned and controlled corporation. It would really be selling goods or properties, yes, but always in performance of its mandate under the IPIRA Act. Okay, so this is the lacking element again. Whenever you see a problem about a sale transaction being in pursuit of or in performance of a governmental a function, then that cannot be subject to the value-added tax. Take the case of power sector assets and liabilities management corp as your a jurisprudential basis. Okay, there's one case cited here, and that is the case of Magsaysay Lines, wherein the VAT assessment was also set aside. Okay, this is not exactly the same as some case. Okay, yung factual backdrop. Okay, hindi ko sasabihin saktong-saktong parehas talaga. Pero may parallel sila. Okay, insofar as the nature of the transaction being parang privatization nga. NDC is the corporation involved in the case of Magsaysay Lines. National Development Company engaged in the business of leasing vessels. In our discussion of income tax, particularly the source rules, we mentioned the case of National Development Company, but that was the other case. The other case respecting the purchase of the 12 ocean-going vessels. Tapos yung ating transaction doon included the execution of notes by NDC because it could not pay the contract price one time, at one time only. So it had to execute notes so that it could pay off the contract price on installment. But of course, by the execution of notes, it also obligated itself to pay the foreign companies, the Japanese shipbuilding companies, interest. And it was the interest payment that was the subject of the BIR's assessment for deficiency income tax, viewing the interest payments of NDC as interest incomes of Japanese companies from sources within the Philippines. Can you recall now? So the case of NDC, the 1987 case of Commissioner versus NDC, was about the taxability of the interests paid by NDC to the Japanese companies as incomes earned by these Japanese companies from sources within the Philippines. Right? So how did we resolve the issue? Applying our law, again, just a recall, the interest payments there represent incomes coming from sources within the Philippines, in that the payer of the same are or is a resident of the Philippines. So in determining the source of interest income, please remember what factor is important in such determination: the residence of the payer. Since NDC, the payer, is a resident, then the interest payments must be incomes earned by the foreign corporations from sources within the Philippines. That was the story about NDC in that 1987 case. In this 2006 case of Magsaysay Lines, here, ang ating storya naman, the vessels that used to be owned by NDC became the subject of sale transactions. One buyer was Magsaysay Lines. This was because during this time, this was the time of then President Ramos. The government was actively engaged in the privatization program. Okay, several government assets were privatized, including NDC. So binenta din yung mga 12 ocean-going vessels, among others. Okay. Not necessarily told, but the vessels were all sold and privatized. So the question there was whether the sale is taxable for VAT purposes. Is there, therefore, a sale in the course of trade or business under Section 106? So parang itong sale of power plants in the case of SAM. Ito pala. Is there a Section 106 taxable transaction? Okay. Sa kaso ng Magsaysay Lines, wala rin doon. Well, ito yung makukuha din natin sa SAM. Just like in Magsaysay Lines, here in SAM, this is a privatization policy being adopted here. The generation assets are sold and to become privatized. In the case of NDC, ganun din. Okay, so look out for this element. If a sale is in pursuit of the government's privatization program, okay, the sale, as in the case of SAM, is in pursuit of its governmental mandate. So what may be lacking, therefore, is the element of a commercial or economic activity being conducted so as to make a sale in the course of trade or business. So lacking this one, therefore, wala rin necessarily ito, the sale of a certain good property is simply that a sale of good, but not in the course of trade or business. It cannot be subject, therefore, to Section 106. Right? Now, let's go to a simpler example. There is a sale, there is an economic activity, yes, sale of property. But if it is not conducted on a regular basis, still there will not be considered sale in the course of trade or business. So you have here, therefore, this topic about isolated transactions. If a sale is merely an isolated transaction, there is no regularity in the conduct of the activity. The VAT may not also be applicable. All right? Now, this is the topic about regularity. This is the usual character of a VATable activity. Okay? There is not just a one-time transaction going on. There should be many, so as to qualify the transaction or activity as being regularly conducted. Now, you also have this phrase, including transactions, incidental thereto. Now, this is the topic that would closest to this concept of an isolated transaction. This is a kind of activity that may not happen every day. Yes, this may happen just probably only once over a considerable period of time. An isolated transaction could be a good description of the activity, but it would still be considered as sale in the course of trade or business when such isolated activity is considered incidental in the conduct of the primary activity, which must surely be a commercial or economic activity. So this will be true to sellers who are engaged in business activities, but also activities that are not, yes, primary activities or main business activities, but may well be considered as incidental in the conduct of the primary activity. So again, what that incidental transaction is in terms of regularity, maybe it is just an isolated transaction. It may not happen every day, but it can still come within the phrase in the course of trade or business. Therefore, even the sale involving those that come under this would still be subject to VAT. A good case is Mindanao in 2013. This pertains to, among others, the sale of a motor vehicle by whom? A Mindanao to Geothermal Partnership. The primary business of this corporation, of course, is the generation and sale of electric power. But in this case, there was considered the sale of a Nissan Patrol. It is a sale of a Nissan Patrol that is one of the subjects of this particular case. Okay, can you see the following? We shall discuss this in a while, of course. But why this became a relevant issue? Because the gross sale from this transaction, sale of a Nissan Patrol, was not reported by Mindanao. Okay, so this is about the reporting of the gross sale from the sale of its Nissan Patrol. Of course, you will report the sale in the VAT return if the sale itself is taxable. Conversely, you will not, of course, report the gross sales in the VAT return when the transaction is in the first place not a VATable transaction. Okay, this is what actually what Mindanao did, omitting the sale or the gross sale from the sale of its Nissan Patrol in the reporting of its taxable gross sales in its VAT return. Based on that idea that the sale of the Nissan Patrol was not a taxable activity. Okay, but this is, of course, the this is countered by the BIR's theory that it is a VATable sale. And it all has something to do with this third paragraph. In the course of trade or business that also includes within its coverage transactions incidental to the conduct of the primary or main business activity. All right? So, is the sale of Nissan Patrol by Mindanao a sale in the course of trade or business as an incidental transaction? And there is that relationship between the sale of the Nissan Patrol and its main business activity. It can be established by the fact that the Nissan Patrol is used in the business. It is even reported in its books, particularly under the account PPE, or property, plant, and equipment. It is a depreciable asset, property used in the business for which the corporation claims a deduction for depreciation expense. Okay, so while Mindanao may not be primarily engaged in the business of selling motor vehicles, as in fact, as we said, it is engaged in the business of power generation. The sale of a motor vehicle, while merely isolated, is still a VATable transaction. So the magic word that you should not leave out in your explanation is that which is contained here in the phrase. The word here is incidental. Okay, please don't forget this, right? The phrase includes incidental transactions. It's not enough for you to write there isolated, because when you talk about isolated transactions, the tendency is even to make it beyond the scope of the application of the VAT, except only when such isolated transaction may at the same time be considered incidental in the conduct of a main or primary taxable activity. Okay. So instead, please use the word incidental to justify again taxation on sale of goods or properties. All right. So that's it. Now you have this following phrase also: by any person, regardless of whether or not the person engaged therein is non-stock, non-profit. So very clear. It should not therefore pose a defense against liability for value-added tax the fact that the person is organized as non-stock and non-profit. As you can see from the case of De La Salle University, even the BIR was not convinced of the fact that the person is organized as non-stock and non-profit. It is not a shield from liability, so long as the person engages in the known taxable transactions here. It would not matter that the person is organized, therefore, as a non-stock and non-profit. See? De La Salle University was even assessed for value-added tax. One of two assessments there. Even if, again, De La Salle University is non-stock and non-profit. Okay, so all that the BIR has established, of course, is that the school had engaged in a taxable activity, and it was Section 108 activity, particularly the lease of properties, that the BIR thought to be made in the course of trade or business under this phrase. Okay, was the BIR, by the way, justified? We already explained that in the past, right? It was justified in causing the issuance of an assessment against De La Salle University. Only that De La Salle University was able to prove its entitlement to exemption from the taxes assessed against it. The exemption was, of course, Article 14, based under that provision in the Constitution, Article 14, Section 4, Paragraph 3. Though that provision required proof of how the revenues generated were utilized specifically for educational purposes. Well, not everything was proven by De La Salle University as having been used for educational purposes. That's why in the De La Salle University case, there was still a small portion of the assessment that was sustained as taxable. What taxes again? Income tax and value-added tax. See, the VAT against De La Salle University was sustained, but only a small portion of the entire assessment. The portion that the school did not prove to have been used actually directly and exclusively for educational purposes. So in relation to our discussion here, that VAT assessment was issued against a non-stock and non-profit. So it should be clear to you that this does not provide a shield from liability. The fact only that the person is non-stock and non-profit. Okay, see this? Irrespective of the disposition of its net income and whether or not it sells exclusively to members or their guests. All right. Now, dito naman tayo sa non-profit. I know that the VAT is a tax on businesses. Okay, and surely there must be profit earned. Okay, usually that's what we think. If the person is engaged in some commercial or economic activity, it's not really far-fetched that the person would earn profit. Okay, so this is the usual character of the value-added tax. But why do we have here the VAT being applied to persons who are non-profit? Because it may also happen that even a non-profit organization could engage in for-profit activities. Okay. What about the income or profit for income tax purposes? The concept that we had before for income tax purposes. When you talk about income, it is already the excess of one's capital, right? What is subject to income tax is an amount that already excludes capital. So in the case of sale of goods, if goods were purchased at say 1 million, the income tax will be applied only on the amount that represents the excess of the amount realized over the capital invested. Okay, so if the selling price is 1.5 million, the income there is only 500,000 pesos, removing therefore in the tax base for income tax 1 million pesos, the cost of goods sold. So in that simple illustration, 1.5 million is the selling price, 1 million is the cost of goods sold. Your gross income there will be 500,000 pesos. That is simply the gross income from the activity. Okay, so there should be more in amount realized than your cost of goods sold in order to realize profit. Otherwise, if the same 1 million is the amount for each, then there is no income. Okay, worse, if the amount of cost of goods sold is higher than the selling price, then there would be, in that situation, loss. Okay, so when would the value-added tax attach? Okay, so this is not anymore for income tax purposes. But of course, just going back, income tax liability arises only whenever the amount of sale exceeds, or the gross sale exceeds the cost of goods sold. For those rendering services, performing services, income tax liability arises whenever the gross receipt exceeds the cost of services rendered, right? For value-added tax purposes, when would the VAT apply? If the amount of gross sale or gross receipt exceeds the cost of goods sold or cost of services rendered, in the same way that we say income tax liability arises only whenever the gross sale exceeds cost of goods sold or gross receipt exceeds cost of services rendered, as the case may be. Well, the answer is not really. The value-added tax applies irrespective of the amount of cost of goods sold or cost of services rendered, as the case may be. So it would not matter that there is even no income or profit arrived at. For purposes of income tax, again, income arises only whenever the amount of gross sales exceeds gross cost of goods sold or gross receipts exceeds cost of services rendered. But here, VAT attaches even where gross sales is equal to cost of goods sold or even lower than cost of goods sold. That is because, again, all that the law here requires for VAT to attach is that there be a sale of goods or properties in the course of trade or business. Okay? Kahit nga sa mga non-profit, kahit pa walang income, the VAT may apply as well. Again, that qualifier, so long or provided that there is income or profit from the transaction, is nowhere found in our qualifications here. So to reiterate, the VAT attaches even if there is, technically speaking, no income or profit received from the transaction, whether that may be a sale of goods or sale of services below. That's so far the lesson that we get out of this case of, in 2000, we had the case of Commissioner versus Commonwealth Management and Services Corporation. So just to give you a short background of this case, Commonwealth Management and Services Corporation is an affiliate of Film Life. There are many other affiliates of Film Life. Commonwealth Management and Services Corporation was set up especially to render technical services to the other affiliates of Film Life. So all its customers, meaning to the persons to whom services would be rendered, are all belonging under the same umbrella, okay, or group of companies. So naturally, the establishment or creation of Commonwealth Management and Services Corporation was not really motivated by the earning of profit. Okay, since again, the clients it would be the other affiliates of Film Life. Instead, this is how it is going to operate. Whatever the cost of services to be rendered by Commonwealth Management would be reimbursed by its client, another affiliate of Film Life. Okay, in other words, it will be operating on a mere reimbursement of cost basis only. Okay, so in the process, it will not be earning any income or profit from its services rendered to its clients. But this did not, of course, deter BIR from issuing an assessment for deficiency VAT against Serco. And it is now put up as a defense against the assessment that there was no profit earned by Commonwealth Management. It was organized not really with that motive of deriving any profit out of its services. And true enough, when it presented its tax returns, it did not show any net profit. It should be logical because anyway, this is how it is operating. Whatever the cost of services rendered, it will simply be reimbursed by its customer. Okay? Ruling, Serco is liable for VAT. Okay, based on our explanation earlier again, our law does not require that there be some income or profit to be derived from the transactions. VAT attaches so long as 106 or in the case of Serco, 108 activity is conducted. And in our law again, this activity is VATable without that proviso or qualification that there be income or profit from the transaction. See this phrase? This is a taxable activity, the sale of service. So all that we need to find out is whether there is performance of service in the Philippines. For others, well, so far, kompleto tayo dyan. In the case of Serco, it is performing service to clients who may be, yes, belonging under the same umbrella of Film Life, but it was for a fee, remuneration, or consideration. Okay, so nagbabayad naman ang mga kliyente ni Serco. And in this part here, for others, the law says for a fee, remuneration, or consideration, nothing else follows the phrase about the fee or remuneration or consideration being above the cost of services rendered. So what is the amount of the fee, remuneration, or consideration that is paid for the performance of service? It may be above the cost of services, it may be also be equal to the cost of services, or it may even be below the cost of services. So the law does not really qualify as to how much the fee or remuneration or consideration be. It may be above the cost of services where, for income tax purposes, income is realized or received, or it may even be equal or below the cost of services rendered. No matter, as long as there is service performed in consideration of such fee or remuneration, VAT attaches right away. Okay, so one more thing, when we talk about the value-added tax, don't be carried away by the statement in your case problem that there is no income or profit realized. Still, many students would think that the VAT is applicable only when there is income received by the seller. It is not really accurate. Okay, so the VAT is applicable in the case of sale of services so long as service is rendered to another for a fee or remuneration. Of course, always in the course of trade or business. Okay, but do not look into what that amount of fee or remuneration or consideration is. Is it above the cost of services rendered? If you make a classification between the amount of the fee as above the cost of services and the other group, if it is not above, so that you will say, in the first case, when the amount of fee is above the cost of services rendered, VATable. For the second, non-VATable. Mali na. There is no such qualification in the law. So to put it in a different way, again, VAT attaches with or without profit. It suffices that the sale is made in the course of trade or business. This is true, whatever the transaction may be, sale of goods or sale of services, so long as made in the course of trade or business. Okay, so what are the possible scenarios then? A seller who is engaged in the sale of goods or properties. Okay, so kahit na dito na lang tayo, okay, para hindi tayo lalayo sa ating mga cited authorities here. Let's just use this as example. There is here a sale of Nissan Patrol. This is vatable, as we have learned, because this is a sale in the course of trade or business. The sale of the Nissan Patrol not being the primary activity, however, just the same taxable because it was determined here to be incidental to the conduct of the primary activity. All right. Now, how much was the amount of gross sales here? Again, we will not really consider whether there was from the sale an income or profit realized. Okay, so in the case of sale of Nissan Patrol, in this case, that happens to be depreciable asset. In income taxation, of course, determining gain or loss would have to be dependent upon the amount of basis to use. Like in the case of sale of properties purchased, the basis is the cost of acquisition. Okay, may adjustment naman sa cost dyan. Okay, because it might have been purchased at 1 million, but after the deduction of depreciation, diba? May mga adjustment din naman. But so long as the amount realized is more than the amount of basis, there is gain. All right? But even if there is no gain, when we talk about VAT, it will not matter that there is no gain or profit that is subject to income tax. It will not matter. The amount of gross sales would be subject to the value added tax. Again, based on that principle that we just mentioned, the VAT attaches with or without profit or income. Okay. Well, in the case of a car dealer, ganun din. The sale of a motor vehicle will be a vatable activity. Only this time, it is the primary activity. It is its primary commercial or economic activity, the selling of motor vehicles. Alright? So, sa kaso ng Mindanao, ano ang kanyang primary activity? Power generation. Pero yung sale dito involves a motor vehicle also. So whether you talk about the car dealer or Mindanao in this case, the sale of motor vehicle is taxable. Okay? It's easier to think that in the case of car dealer, profits will be earned. Yan ang kanyang primary business activity. Profits will be earned. It's much easier, again, to visualize a car dealer deriving income out of its sale of motor vehicles. It's also understandable to think that in the case of Mindanao here, the sale of its motor vehicle, an isolated transaction, is a transaction that may not yield for it income or profit. But just the same, the activity is vatable. All right, so let's consider that situation. Mindanao does not earn income from its sale of Nissan Patrol because the amount realized is not more than its cost basis or adjusted cost basis. Doon na lang tayo sa situation na yan. Pagpalagay lang natin na ang kanyang selling price is not more than its adjusted cost basis. So wala siyang income doon. But again, for VAT purposes, as we said, the tax applies because under our law, the VAT attaches with or without profit. Okay, so viewing therefore the two cases entirely. Sa kaso ng car dealer, meron siyang income at meron siyang vatable activity, di ba? So may income tax liability on the income earned. But ano ang starting point ng ating computation ng income tax? Ano ang starting point? We do not subject to our computation for income tax the entire gross sale. we remove from the amount realized the capital. Kaya nga, ang computation natin kanina, if gross sale is 1.5 million, the cost of goods sold is 1 million, it is only the 500,000 pesos that will be subjected to our computation for income tax. Because it is that portion of the amount realized that is income. Okay, the rest is return on capital. That should be removed from our computation for income tax naturally. Okay, so amount realized 1.5 million, but only 500,000 pesos is gross income. And in the computation of the applicable tax, again, in the case of car dealers, the main business of which is the selling of motor vehicles. We talked about the types of Philippine income taxes before. That type of income tax applicable is none other than the basic or ordinary tax. Okay? So, basic tax applies on the 500,000 peso income in this illustration. Gross income pa lang yan because basic tax is applicable, the law admits of deductions. Dapat naman talaga may deductions because basic tax is a tax on taxable income. Kaya nga, starting point lang natin in our computation for the applicable income tax, yung ating income na 500,000 pesos. It's not 1.5 million again, but 500,000 pesos. After deductions, then only then we can apply the income tax rate. For VAT purposes, however, our computation is based on the entire amount of sale. So 1.5 million yung ating gross sale, doon tayo mag-compute ng VAT. Okay? The VAT is a tax on the activity of selling goods in the course of trade or business. But for convenience, in our computation of the amount of liability, the law pegs the amount of gross sales as the tax base. Okay? So, 1.5 million yung ating gagamitin pag nag-compute na tayo ng value-added tax. And of course, the tax rate for VAT presently is 12%. So it's easily 12% of 1.5 million. That is the amount of liability for the value-added tax. So in whole again, the person is engaged in sale of motor vehicles in the course of trade or business. There is income earned subject to income tax. At the same time, there is VAT liability because the seller is engaged in a taxable activity. So two taxes affecting only one person, only one taxing authority is collecting those two taxes. But there is, in the strict sense, no double taxation, of course, because there are two different tax bases. One is a tax on income, the other is a tax on the activity. All right? In the other case, now we go to Mindanao. And under that premise that there is no profit actually realized by the seller in the sale of its motor vehicle. Right? So if there is no income realized, naturally there will be no income tax liability arising from this sale of a Nissan Patrol. But regardless of the fact that there is no income realized, there will be liability for value-added tax because Mindanao is engaged in a taxable activity, a sale of goods in the course of trade or business. Though the sale itself is not the primary business activity, but it is considered incidental in the conduct of its main taxable activity, which is power generation. All right? So no income tax liability, even if there is, because there is no income earned, but there is liability for VAT because there is a sale in the course of trade or business. Now, for us here who may not be engaged in a trade or business, but who may definitely have sale of goods or properties from time to time, diba? So, if we sell, for instance, we are not engaged in the business of selling motor vehicle, pero may kotse naman tayo. Halimbawa lang naman, nagsawa tayo sa kotse. Okay, so binenta. right? Let us suppose that there is income realized from the sale. Okay? Ipagpalagay lang natin na mayroong income. Because the amount realized is over and above the cost basis. Let's say that there is income for purposes of our illustration. Is the seller liable for income tax? Again, remember that this time around, the seller is not a car dealer. The seller is not even engaged in any trade or business. Is the sale subject to income tax? Rather, is there income tax liability arising from the sale? There will be liability for income tax. As under our premise, there is income realized, diba? Even though that income is particularly classified as capital gain. Now, you remember why we are saying here that the income is capital gain? Because the car is, in the hands of this seller, a capital asset. The gain realized from sale of capital asset is capital gain. Right? So it will not matter that the sale is in the course of trade or business. For our law on income taxation is so broad in scope as to include not just trade, business, or professional income, but all other kinds of incomes. You have either active income or passive income as coming within the scope of our income tax. See? So the person may not be a car dealer, but the income realized from the sale is subject to income tax. But the activity itself, the sale of goods, is this a taxable activity for VAT purposes? Now, our answer is no, because again, our law requires that the sale itself be made in the course of trade or business for it to be subject to the value-added tax. So let's review. This is a sale by a person who is not engaged in the business of dealing in cars. The person making the sale is not a car dealer. A person who is not in fact engaged in any business, in any trade or exercise of profession. So necessarily for income tax purposes, the property is capital asset. If there is income earned, the income is capital gain. The capital gain here is subject to income tax. Still, even if it is not business or trade or professional income. What type of tax is applicable on the capital gain earned by the seller from the sale of this car? Please don't say capital gains tax, because the capital gains tax, as we know, pertain to two kinds of capital gains. Either the capital gain is derived from sale of shares in a domestic corporation not traded in the local stock exchange, or the capital gain is earned from the sale of realty located in the Philippines. All other classes of capital gains must be subject not to capital gains tax, but to basic tax in general. So this person who is engaged in a sale of a car, not in the course of trade or business, will be liable for basic tax on his capital gain. That's how it is. And I hope that you remember our discussion before when we talk about capital gains or capital losses. There is applied in the case of individual sellers, individuals lang not to include corporate taxpayers. There is applied the rule on holding period. And this is a rule on recognition. How much of the capital gain earned or capital loss incurred is recognized. Only 50% if the holding period is long-term, meaning more than 12 months. Right? The rule on holding period is section 39, paragraph B. Don't forget this. A rule that applies in the case of capital asset transactions. By whom? By individuals only. So assuming again that our gross income is 500,000 pesos because the selling price is 1.5 and the basis is 1 million. Okay, so the 500,000 peso amount is our gross income, and what particular item of gross income, by classification under section 32B, it is gain, right? It is gain derived from dealings in property. But because the property is capital asset, that gain of 500,000 is capital gain. If the property had been held for more than 12 months, tax liability will be computed on the basis of only half of it. Only 50% of the capital gain, in this case 250,000 pesos, will be taken into account in computing net income. This is your income tax side. Okay? Is there income from the sale? Yes. And therefore, is there liability for income tax? Yes. What type of tax? Basic tax. And we will apply the rule on holding period, considering that the gain is capital gain earned by an individual. But on the VAT aspect, on whether it is applicable or not, it's easy. The VAT is not applicable because the sale of the car in our example is not a sale in the course of trade or business. We are here considering the sale by a person who is not even engaged in any commercial or economic activity. That's why the VAT is not applicable. All right? So can we now make another modification to our scenario? Suppose that the person is not a car dealer, yes, but he is engaged in the business of operating a convenience store or restaurant. Okay? And the sale involves a car or motor vehicle that is used in the operation of the business. Okay? So again, the person is not primarily engaged in the business of dealing in cars, but one who is engaged in a way in business. And the subject matter of the sale is the motor vehicle that is actually used in the business. So, ang ating business ay catering or restaurant or convenience store. Sale of a motor vehicle used in the business is a sale that can come under this phrase in the course of trade or business. The sale of the motor vehicle being considered a transaction incidental to the conduct of the main taxable activity. Ano ang main taxable activity for VAT purposes? The business of operating a convenience store, a restaurant, or catering service. Okay, so papasok dito sa 106 in the case of a convenience store or sa restaurant and catering service, 108 activity naman yan. Tax on sale of services. Okay, so whether under 106 or 108, therefore the sale of the motor vehicle used in the business is a sale in the course of trade or business. Well, not primarily the activity engaged in by the person, it is incidental to the conduct of the main taxable activity. So it is really, in essence, Mindanao 2 case. Ganun din naman. Si Mindanao nga lang is engaged in power generation as its primary taxable business activity. The sale of its Nissan Patrol is vatable under this phrase. Okay? So before we take a break, ito na lang yung aking example ulit. The 2014 bar exam. After the 2013 Mindanao case was promulgated, it took just 1 year for a question on this topic was asked. Masarap Kumain o MKI. See this? It is a VAT registered company. What is its business? Catering business. All right. MKI sold its delivery van. Right. So this is the transaction here. Question is the sale of the delivery van subject to VAT? Okay, what is the primary? activity, catering business, that is the one that is subject to the value-added tax, MKI being VAT registered. In fact, it is not a car dealer for sure, but could the sale of its delivery van be subject to VAT? It could be subject to VAT under this paragraph. The sale of the delivery van being considered a transaction incidental to the conduct of its main taxable activity as a VAT registered company engaged in catering business. What else is there mentioned in the facts? The selling price was way below the acquisition cost. Now, normally, this would lead one to think there is no income if the selling price is below acquisition cost. Again, there might be no income earned, but it does not automatically follow that the VAT is avoided. Consistent again with our case of Comaserco. Right? So it will not matter that here in this case, no income is earned as when the selling price is below the acquisition cost. VAT is not a tax on income, but on the sale of goods made in the course of trade or business, which is the case here, even if the sale may be considered merely incidental to the conduct of the main business activity. NKI. Rather the problem asked in the 2014 bar exams. But your foundation again, Commonwealth Management Services, insofar as the profit is concerned. Whether it is existing or not, it does not matter. VAT applies with or without profit, and then you have the Mindanao case. Even if the sale of a good is not the primary activity, it may be merely incidental and should even be isolated transaction in fact. So long as incidental to the main business activity, it can be considered still as VATable as one falling under the phrase in the course of trade or business. Okay? So yan po. Ito na lang siguro, hindi naman ito kasikatan sa bar exams, but just consider the situation of a foreign person. See this, qualifier pa nga is non-resident. When you have a non-resident foreign person being engaged in the activity subject of the question, it may be just one time. It may be just an isolated transaction also. But our law already provides the rule. The service performed by this non-resident person shall be considered as being rendered in the course of trade or business. So again, the whole point here is maybe the person may have been engaged in an activity only once during the year. But if this is the service rendered by a non-resident foreign person, our law treats the same as anyway rendered in the course of trade or business. The consequence, therefore, is that the service is a VATable activity, okay, as one being rendered in the course of business. Okay, so what will be discussed next? What will be discussed next? Mas ano na tayo, mas technical na tayo. So knowing what are the taxable objects, okay, that's so far what we had discussed, and the many possibilities, okay, many possible case scenarios wherein the question is simply, is VAT applicable? Okay, tingnan mo itong question ha. Okay, this is the most popular question. Subject to VAT or not? And it is all about determining whether there is a sale of goods or services made in the course of trade or business, which would include even incidental transactions. So hahanapin mo kung meron bang sale. Dito walang problema kasi talagang factually provided that MKI sold. So merong sale transaction. Okay, merong sale transaction. So on the flip side, if there is no sale, it follows necessarily that, of course, wala ring VAT liability. Though in the next part on sale of goods, meron din naman tayong provision about transactions deemed sale. Of course, yes. At ito natatanong din naman sa bar exams din. Technically speaking, therefore, maaaring walang sale by seller to the buyer, the usual transaction where there is a exchange of goods, okay, in consideration of amount paid. But under this provision, paragraph B of 106, transactions deemed sale, the law recognizes a deemed sale made. Okay, like in the case of consumption, not in the course of business of goods that are originally intended for sale. So hindi itong transaction na nangyayari halimbawa sa tindahan, na mayroong pumasok, bumili ng item. Maaaring ito mismo yung operator ng tindahan, siya ang kumain ng kanyang tinitinda. So walang exchange of goods, okay, between the two persons and payment of a certain amount, okay, for the purchase of goods. But the transaction here, the use or consumption by the store owner himself of goods originally intended for sale is a transaction deemed sale. So if there is deemed sale as opposed to actual sale, there may also arise VAT liability still. Right? So deemed sale transactions for. Okay, so at this point, it's 9:58, so we can take our break.